Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Chinese economy, and specifically to talk about the property sector, which has just entered its fifth consecutive year of downturn. This is an absolute nightmare because in the first 20 years of this century, the Chinese economy was basically driven by the growth in the property sector. And the fact that it's now completely collapsed is really causing major problems for the Chinese economy. That's one of the reasons why the economy is struggling to be able to achieve its 5% growth target. And one of the largest property development businesses that's still remaining, Vanke, which was linked to the state. It's a state-backed company. It's not 100% owned by the state, but it does have a stake in it. So therefore, it's unlikely that Vanke would ever go completely bust in the same way as Evergrande did. Vanke is facing huge repayments in 2025. It's got a debt wall of $4.9 billion that needs to be repaid. And one of the problems that Vanke has is that it's continuing to ship losses. It recently reported its third quarter results and showed a loss of $1.1 billion, $1.1 billion, and it's forecasting that for the full year of 2024, it's going to lose $2.4 billion. So this is a company that needs to find $2.4 billion just to cover its losses, never mind the $49 billion it needs to repay all of the debt that's maturing this year. So firstly, before we get into the details of what's going on with Vanke and the proposed bailout put forward by the Chinese authorities, let's have a look at what's going on in the property market right now. Now, just before we go on any further today, I want to talk to you about Ground News, who I've been working with for the past 2.5 years and who I've partnered with for today's video. And they're offering Joe Blogs viewers an exclusive 40% discount on their Vantage plan, which is what I use. And what's brilliant about Ground News is that they're a news aggregator. They bring together stories from all around the world. And if we look at the articles that Ground News pulled together, talking about China Vanke's CEO and chairman resigning amid the growing liquidity crisis, you can see that they pulled together articles from 22 different sources. And what's great about Ground News is that it tells you whether those articles came from a media outlet that leans to the left, leans to the right, or comes from the centre, and that's really important to me when I'm trying to provide balanced coverage. Ground News are offering Joe Blogs viewers a 40% discount on the unlimited Vantage plan, which you can access by scanning the QR code on the screen now or clicking the link in the description below. This chart shows the year-on-year movement in new home sales in China, and new home sales is the key metric that we're looking at because this is the vast majority of the market. Most people in China want to buy property that's newly built rather than old stock. And the scale on the right-hand side of this chart shows the percentage year-on-year movement and goes from 10% positive at the top to minus 65% at the bottom. And what this shows is that in January 25, the year-on-year value in new home sales fell by 3.2%, which is clearly a very bad result for all of the property development businesses in China and also for the Chinese economy because property historically was making up around 25% of GDP. However, the situation is much worse than that because if we expand the scale of this chart to show what's been happening over the past 3 years, you can see that in January 24, the year-on-year movement in new home sales was actually down 34.2%. So the 3.2% fall in 2025 is actually on top of the 34% fall in 2024. And that 34% fall was on top of a 32% fall in January 23 and a fall of 47% in February 22. So when you add up the cumulative impact of these year-on-year fall in sales, it represents an absolute disaster for the Chinese property sector. And if we have a look at this chart, which shows the year-on-year movement in prices in the property sector in China, you can see that China has seen 12 consecutive months of falling property prices. And the most recent data for December 24 shows that year-on-year, prices are down by 5.3%. But once again, if we expand the scale of this chart, you can see that prices fell in January 24 by 0.7%, and in January 23 by 1.5%. So once again, we're seeing a year-on-year cumulative negative impact on the market. So the property market data is telling us that things are still bad in the property sector in China. We are not seeing any sign of a recovery. So that obviously represents seriously bad news for all of the property development businesses in China, because they can't trade their way out of this. If there was suddenly a bounce back, if prices were rising by 10 or 15% and we were seeing a huge demand for property, then maybe they could recover their situation. Maybe they could pay the interest at least on their debt. But what we're seeing are continued problems, which mean that the losses for all of the companies that continue trading are likely to get bigger and bigger. And from Vanke's point of view, it's got a huge amount of debt. This chart shows the total amount of debt on Vanke's balance sheet dating back to 1996. And the scale on the left-hand side of this chart is shown in billions of US dollars and goes from 0 at the bottom to 60 billion at the top. And what this chart shows is that between 1996 and 2005, Vanke had relatively very little debt. And by the end of 2005, its debt was $450 million. Between 2005 and 2015, Vanke started loading up on debt. And by the end of 2015, its balance sheet was showing $12.2 billion of debt, so a significant increase in that 10-year period. However, in the 9-year period between the end of 2015 and 2024, you can see that Vanke hugely increased the amount of debt, and the current amount of debt on its balance sheet is just under $50 billion. And this is for a company that's likely to make a loss of $2.4 billion in 2024. And this chart shows the price of Vanke's debt in the secondary bond markets over the past 3 years. And the scale on the right-hand side of this chart shows the value of those bonds in terms of cent on the dollar, and goes from 30 cents at the bottom to 110 cents at the top. And you can see that back in 2021, Vanke's bonds were actually trading above $1. So basically, people were paying a premium because they thought that Vanke was such a good bet, it was such a good business, that they'd be happy to pay more than $1 for a $1 loan so that they could get the interest, because this was a no-risk situation. However, as you can see, over the past 3 years, the bond markets have changed their view entirely on that. And the latest data that was published on this chart shows that before the bailout that's recently been rumoured, the bonds were trading at less than 40 cents on the dollar. So that basically indicates a 60% write-off. If you take on one of those dollar bonds, you'll only get back, on average, around 40 cents on the dollar. That's what the bond markets are pricing these bonds at the moment. And this table shows the schedule of Vanke's bonds that are due for repayment in 2024. So you can see that the first one here was due to be repaid on the 27th of January, and it was 3 billion Chinese yuan. Another 3 billion was due for repayment on the 16th of February, followed by 2 billion on the 25th of February and 890 million on the 3rd of April. And as you can see, Vanke has a variety of other repayments that are due throughout the rest of this year. Now, as you may well be aware, the way things work in the bond market is that you don't actually have to have the money to repay those bonds. What you normally do is issue a new bond. So if you've got a bond of 3 billion yuan that's maturing, you issue a new one for 3 billion, and you use that 3 billion that you've taken from the new investors and give it back to the old investors, and things just carry on rolling on forever. Now, that obviously works well as long as the company is still performing to plan. But as we've just discussed, Vanke is nowhere near its plan. In fact, it's insolvent, it's making losses. It simply doesn't have enough money to make the repayments on all of those bonds. In fact, it doesn't even have the money to make the interest repayments. It doesn't have any money. In fact, it's got 2.4 billion of losses that it needs to find funding for. So in a normal scenario, if this was in the West, and Vanke was looking to renew its bonds, obviously it wouldn't be able to. Nobody in their right mind would put 3 billion Chinese yuan into a new Vanke bond today, because the company is simply not performing anywhere near the level it would need to justify that. And so if this was in the West, Vanke would now be facing insolvency, bankruptcy. It would be going for Chapter 11, all of those sort of things. And that would be the end of Vanke as a trading entity. But because it's in China and because it's partially state-backed, that isn't going to happen. It's going to survive. The Chinese authorities have now announced a $6.8 billion bailout for Vanke. And the way that this is going to operate is that the $6.8 billion will be used to buy unsold homes. So basically, the state will be buying all of the properties that Vanke either has built and can't sell or hasn't been able to complete the build on. It will buy all of those. So basically, the government is nationalising a lot of Vanke's stock. And the funding will also be used to buy back vacant land that Vanke hasn't started building on. And this is a really interesting point because that land was sold by the local governments to finance their positions. So the local governments own the land. They have these auctions where they then sell the land to companies like Vanke. So they take in the money and then they do lots of things with that. They've been building up their own debt. Vanke buys the land. It then can't develop it because it doesn't have any money. So the government is now buying it back. So we've got a very circular situation here with a piece of land where nothing has actually happened on it, but it's traded hands twice. Vanke bought it from the local governments, providing them with much needed funds. And now the central government is buying it back from Vanke to bail out Vanke. So we've got a very circular situation here. So this bailout basically will solve the short-term problem of what Vanke is going to do in terms of all of the bonds that are maturing in 2025. But obviously that doesn't solve the bigger issue of what's going to happen with the $50 billion of debt that Vanke has. And when you look at what's happening with its trading, it's a million miles away from being able to get back to the position where it'll be able to pay the interest and make repayments on that debt. So what's the summary and conclusion today? Well, I wanted to post this video because we've been talking about the Chinese property sector on and off for the last 3 or 4 years. And it's easy to forget what's going on at the heart of it, what's happening with property prices and property sales. But as we saw from the latest data, they're both down year on year. But actually the situation is much worse than that because the metrics have been falling for the past 3 years. So we've got price falls coming on top of price falls, coming on top of price falls, and value sales going down and down and down. And that obviously represents seriously bad news if you're involved in this sector. If you're a large property development company, then the future really looks bleak because there's no end in sight to these problems. And what we've talked about in today's video is that Vanke, which is one of the largest property developers that's still existing in China, it's still trading, and it's partially funded by the state, is having an absolute nightmare. It's reported in its most recent quarter a loss of $1.1 billion. That is a huge loss. And it's estimated that for the full year of 2024, that loss will come in at $2.4 billion. Now, any company that posts a loss of $2.4 billion, you have to ask questions as to whether or not it's solvent. Can it continue trading? Can it survive? And if there are short-term reasons for it, if there's a one-off write-off or something happened that you go, well, that will never happen again, that's just a freak occurrence, it can't reoccur, therefore the company might survive. But what we're looking at here is the death by 1,000 cuts, because Vanke has been struggling for the past 3 or 4 years. It's seen falling sales, it's seen falling revenue, it's been cutting its costs, but obviously it can't cut all of its costs. And one of its biggest costs is its debt burden. It's got $50 billion of debt on its balance sheet. So it has to make repayments and it has to fund the interest on that. And you can't do either of those things if you're losing $2.4 billion. So when you take a step back and look at it in those terms, this business is completely bankrupt. It's a write-off. They should just close it down and move on. But obviously, the Chinese authorities don't want that to happen. They want the property sector to recover. So they want Vanke to keep on building. And so it's now announced this bailout of $6.8 billion, of which around $5 billion is going to be used for refinancing some of the debt, and the rest of it will be used to fund some of the losses, not all of the losses, because it doesn't add up. If you've got 6.8 billion, it doesn't go in to 4.9 billion plus 2.4 billion of losses. You've got a surplus there, or a deficit, as it is in reality. So the Chinese authorities are likely going to have to announce more of these bailouts. In fact, they're going to have to do one every single year if they want Vanke to survive, because it's going to face more debt refinancing in 2026 and 27 and 28 and so on. So this really is just kicking the can down the road from the Chinese authorities' point of view. It isn't solving the problem. The problems are fundamental. The property sector is completely on its knees and doesn't show any signs of turning around at any point in the near future. That means that all of these big companies that have lots of debt are basically zombies. They're just continuing to survive, but they're dead men walking in terms of they will never be able to repay the amount of debt that they have. the Chinese government realistically is going to have to nationalize a lot of these businesses and a lot of that debt. That's what it started to do. That's likely to continue. All of that will increase the amount of debt that the Chinese authorities, the Chinese government has on its balance sheet. And all of this is really bad news at a time when the Chinese economy is slowing down anyway. So the overall summary of today's video is that what we are seeing with Vanke is likely to happen with a lot of the other property development companies, in fact, all of them. The Chinese government is going to have to bail them out or let them go bankrupt. And all of this is seriously bad news for the property sector at a time when it's already on its knees, prices are falling, sales are falling, and all of this represents serious problems for the Chinese economy in 2025 and beyond. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and here's something to put a smile on your face.